The price of Bitcoin broke down from this ascending wedge yesterday. However, early this morning, we got a significant recovery above $57,000. We are going to talk about the scenarios. Will we form a lower high or a higher high and break out or get the rejection? I'm going to explain in detail what we need to see at these certain levels of resistance and support. Now, I need to give a shout out to 𝗕𝗏𝘆 because he talked about entering this short, managing risk very, very well, and looking for some target zones. Already explaining where he's protecting position and taking some profits, realizing that the price could have this reversal. So most importantly, detecting that breakout is easy. However, where is your stop loss? Where are you taking profit is most important, guys. If you want to join the Legends trading community, you have the first link down below where we provide every single day technical analysis locally, potential setups on the price of Bitcoin and altcoins. Now let's go right away into the content, guys, into the pure technical analysis. Now we do have that lower high resistance trend line, keeping it simple, right? If we were to successfully break above this trend line and get above certain levels of resistance, this might be looking very bullish. However, we need to take into consideration the liquidity grab, the possible fake out on these levels of resistance that we are very close to, guys, because we do have significant amount of liquidity above 57,700. There's hundreds of millions of dollars all the way up to $59,000. Could we get an attempt of a breakout and just a liquidity grab and the price is going to roll down? Well, the most important level of resistance is that naked point of control from last Sunday. When we take a look at the session volume profile, we got that high volume node, and this high volume node is where we have massive Fibonacci confluence. What do I mean by that? When we take a look at Fibonacci from the highs that we formed last Monday at $70,000, we can see the 50% Fibonacci is just slightly above that point of control. Now, when we take a look at Fibonacci from another lower high over here, we get the Fibonacci retracement. We can see the 618 is also in confluence with the 50%. If we take Fibonacci from the latest drop that we do have here, we can see that we do have the 0.88 Fibonacci. So we got some crucial pivots here, and we can see massive Fibonacci confluence, 50%, 618, 0.88. And if we were to come all the way up there to that level, we got that beautiful lower high. This is at 59,500. You might think to yourself, wow, if we're going to get all the way up there, this is likely going to get a significant breakout. This is a solid breakout. Continuation to the upside is very likely. This is a possible rejection point. You have the naked point of control, the 0.88, 618, 50% from different pivots from the local drop that we've had during the last week. So without a doubt, you'll be facing that resistance lower high trend line. You'll be also facing the higher low support level from the ascending wedge. As you can see, if you were to get that move up, you're going to start struggling with lower high resistance, with higher low support from this ascending wedge. It could be a back test and the price gets a significant recovery. Now, if we are talking about bullish case scenarios regarding Elliott wave theory, this is a wave one here in a contracting diagonal, and we've had this retracement being only one wave. It does not make sense. It makes more sense that we are going to be forming an ABC kind of correction, potentially topping out here already at the 0.88 and then getting a leg down. We'll be explaining that scenario now on the lower time frames. However, the possibility of a flat scenario is also there. And the main reason why is because we've only had one corrective move here in a one wave, in an A wave, right? There's only been one correction. You usually want a zigzag, right? That's what you want to see on an ABC corrective move, not only just one move down and then the price is going to the upside very successfully. This is unlikely to happen. And also, we've had a very shallow retracement for a possible wave 2 or a wave B. Taking a look at the pivot low from Monday to the pivot high, we haven't even hit the 382 Fibonacci. So that is very disturbing. This is telling me that any move to the upside is still going to be corrective, and we're not going to get that explosive move to the upside just yet. So the most important level that I'm looking at here on higher time frames is that $58,900 range At the most, we could get that wick here to the upside. I'm paying attention to this lower high for that possible swing failure pattern and getting back inside beneath the lower high resistance trend line from this bump and run scenario to come back down and claim the lows from yesterday. Now, if we do take a look at the session volume profile, yes, we do have the previous day value area high. This is basically where we are struggling right now as resistance. Previous day value area high, you got the point of control. So without a doubt, this could be a lower high right there, especially because we are forming some local bearish CVD divergence. In the blue, we have here lower highs on the price action and higher highs, as you can see right over here. So there is a possibility that this could top out and start moving to the downside in the next coming hours. Okay, you need to be very selective. There is a possible scalp short position here to attempt when you're hitting the highs, guys, managing risk very, very well. You might think, how can I get into this short position? Well, as you're moving up to this level, this is the shorting range. You need to be very defensive. You could claim the highs again and form another top right there and then start moving down. You're not interested if the price on the lower time frames is moving above the level and you're maintaining above that local level of resistance on the lower time frame. If the price moves up from this point and maintains above this level, you're not interested in the short, only on the rejection. So you can be very defensive with your trading position, speculating that the bearish CVD divergence could happen and you're rolling down back to the lows. Be very selective, manage risk very, very well, because there is a possibility of the price shooting here to the upside to claim all of that liquidity, guys. Now, if we were to get that intensive move, I am really just interested in this massive level of confluence, like I just explained, potentially to hit the trend line and then already here get the rejection or break through and hit that lower high. This is crucial lower high where the price could definitely get a rejection. Of course, I would be taking into consideration the possibility of a failed auction from yesterday's highs. We could only just wick above this level and then start correcting down back to the lows. Just because I do see the possibility of an ABC flat scenario here. And the target zones of an ABC flat is getting the top here from the start of the A wave to the bottom of the A wave. And if we do get the Fibonacci extension and reverse it, you ideally want to see in between 1-to-1 and 1-2-3-6 Fibonacci for that flat scenario. So a failed breakout from yesterday's highs is definitely on the cards for the price to get another pullback to come back down to the lows. Now, what do we have here also? What if the price starts moving down? We're talking about the local levels of resistance and how you need to play this price action. You need to see the rejection to have an attempt in getting into the short position. If you break out and you maintain above yesterday's highs, this is likely just going to get that continuation to the upside to get to the $58,000, $59,000 range till we actually see a reaction. What kind of reaction? Well, it's as simple as, hey, if the price is punchy and it just gets all the way up to this lower high, this is the level that I will be waiting for the price to get a rejection. However, here locally, I would need to see choppy price action. What is choppy price action? Well, basically something like this, where the price on the lower time frames hits the level and starts consolidating here, forming local double, triple tops. That is when you know the price is getting exhausted, and I would attempt that possible short. Or just remain patient and look for the failed breakout, meaning that you're getting back below this level and you know that the price is likely going to get that retracement in the next coming hours or in the next 1 to 2 days. So that is what I'm looking at here. If the price just continues, there will be no shorts to be taken if the price just breaks through with high volume. We do not want to fight the major pump. We want to see that exhaustion and proof of resistance like I just explained. Now, what if these bearish CVD divergence play out? We start moving down. This has been a lower high on an A, B, and we're looking for the C move to the downside. Well, most importantly, I will be remaining very patient to go to lower levels. Now, the best level without a doubt is the $52,700, where we do have that higher low. We do have the naked point of control also from Monday. There's two high volume nodes from Monday to take into consideration. And the biggest one is at $54,200, which we did not reach. I would expect this one to actually break down just because of a possible large ABC scenario. And when we take a look at Fibonacci extension from the pivot high to the pivot low, we do have the possibility of going to the 1.618, right? If this were to be the local high and we start moving down, I would be remaining patient. I would see the price actually going to lower levels. And the major target here for a very extensive ABC scenario, without a doubt, would be the 1.618, where we have that pivot low and that naked point of control. Now, could we come down and hit the 1-to-1, 1-2-3-6, and then form this kind of price action? Very possible, but inside of this area between 54,000 and 52,700, I will not do anything. I will just be remaining patient to see if we do see that failed auction from today's lows and see the fake breakout and then a sign of strength getting back above that level to then project another move here to the upside, meaning that this could be the end of the wave 1, wave 2, and if I do see that price action reclaiming the lows from yesterday and this naked point of control, that will be a good sign of strength. I will be speculating for another move to the upside in the next coming days. Of course, breaking down, guys. There's nothing to do till we actually see the reaction and certain levels being reclaimed, such as the lows from yesterday or this pivot low. If you move down to this level, you have that failed auction, you get acceptance back above. This is going to be a good sign, guys, for the price to get that continuation to the upside. Remember, guys, you do have a 15% cash back from your initial deposit when you are trading on Bluffin. It's a no KYC platform, just with an email and a password. You can sign up with a link in the description, get that 15% cash back from your initial deposit, and you can start trading in minutes. Not much more has to be said on this update, guys. Trade safe, and I'll see you on a live stream later on.